Good morning, good afternoon for those of you not on the West Coast. Good evening for those of you who might be out of the country. My name is Bill Neville, that's me, and the little circle there. And we are doing, we're going to be talking today, going through a real estate investor market research report that Entrust created for the third year in a row. We're the only company in our industry that is putting this report together. And so we're going to go through that, and then I'm going to answer any questions you have at the end, which can be about anything self-directed IRA related. Doesn't necessarily have to be specifically about this report. So feel free to type your questions in, and I will answer them at the end of the presentation. As always, for those of you who attend these webinars regularly, we present this disclosure. Entrust does not provide investment advice or endorse any products. All the information and materials are for educational purposes only. If you're thinking of investing using your IRA, you're encouraged to consult with attorneys, accountants, and financial advisors before entering into any type of investment. So bear in mind that we are not attorneys, accountants, and financial advisors. We are certified IRA service professionals, the majority of us, and we know retirement accounts, but we don't give investment advice. So this is the agenda. We're going to go quickly, just a little bit about Entrust, and then we're going to go through this market research report, which goes over real estate investment trends that we've seen with our clients who have invested, and then we're going to provide some national real estate investment trends, and then just 3 quick reasons why you would want to invest in real estate with an IRA, and then as I mentioned at the end, we're going to have a Q&A, which you can get answered by typing your question in the chat box there. A little bit about Entrust. We have been in business for over 35 years at this point, 36 years. We also have over $3 billion in investor assets. We've been getting a lot of new accounts, so we probably need to update this information. So we are one of the leaders in our industry, maybe the leader in our industry. It's a niche industry, and we're one of the main players in it. So most people who know about self-directed IRAs know about Entrust. We focus on education. We are the only company in our industry that has a continuing education program for realtors and for CPAs that can provide 2 CE credits for those. We do national and local in-person presentations. The CE program has to be done in person, and we're certified in certain states to do that. And then we have the webinars, and we have an IRA Academy, which we're holding another one this year down in Orlando, where we have someone in our company who teaches our competitors and people in our industry, gives training so that they can become certified IRA service professionals. So we truly are, and from an education standpoint, we absolutely are the leader in our industry. So there's the cover of our 2017 Real Estate Investor Market Research Report. Again, we're the only company in our industry that does this. This is our 3rd year that we've put this report out. And you can download it off of our website if you want to get it. And we're going to go over pretty much the whole thing in this presentation. So this is where investors bought real estate in 2016 using their Entrust retirement accounts. And you can see California dominates in terms of our clients. And that's consistent, I think, probably where the majority of our clients have. If you look just in general where most of our clients, this pretty well coincides with that. California, Texas, Florida is up there, probably a little higher in terms of number of clients that we have. Not necessarily represented as much in where they're buying real estate. But California, Texas, Colorado, Florida, and Arizona are leading the list. Ohio, Tennessee, Indiana, and Washington were not on this list previously, so that's been an area that people are investing in real estate that's kind of new for us. And broken down by region, the West, as you can see as we compare 2015 to 2016, actually decreased a little bit, offset by more people are buying in the South and the Midwest, and the Northeast increased a little bit. So in terms of where the majority of people are buying, it's still in the West, but it has gone down a little bit an increase by the South and the Midwest from last year. This is showing where our clients have bought, what percentage of our clients bought in-state versus out-of-state. And so in California, you can see that more of our California clients are choosing to buy outside of California as opposed to inside California, which probably speaks to the affordability of buying investment property in California. Colorado has gone up, and Texas also dropped a little bit in terms of locations where our account holders are buying property. And Arizona and Florida has remained. If you live in Florida, if you're an Entrust client, you live in Florida and Arizona, then you're buying your investment property in Florida and Arizona. You're staying local. This is showing the average purchase price of our account holders where they're investing and how much it's increased or decreased. And we looked at our top 5 markets. And you can see California has gone up pretty dramatically. So clients in our account holders in the previous year, the average price of a property in California for investors with Entrust accounts is now 66% higher compared to the previous year. And Texas also has gone up 61%. Colorado has gone up 54%. Florida and Arizona have dropped a little bit. Now, I'm going to point out that this doesn't necessarily mean that properties have dropped in Florida and Arizona, but it just means that the type of properties that they have brought or the value of the properties that have been purchased in 2016 are a little less in those cases than they were in 2015. So maybe there was more multifamily that were being bought in 2015 than bought in 2016. But this is the average price of what was purchased by our account holders in the year 2016. California is way up there, but I think probably most people would have expected that. This is the first year that we added this slide where we added where the investors sold their properties in 2016. And you can see California, the properties sold make up 40%, then Florida 10%, Tennessee on down. This is, in California, the clients made 40% of the sales, but were 25% of the purchases. So our account holders did more selling in California than they did in buying in 2016. Nearly 10% of the sales were in Florida, 4% in Arizona. Those are 2 states that were also on the top 5 list for purchases in 2016. And Tennessee at 7%, New Mexico at 5% were a little bit surprising compared to the purchases that were made by our account holders. And again, by region, we showed you by region where they were purchased, and this is by region where they were sold. And so with 40% of those being in California, make up that 50%. That's why it sort of tilted so far. But you can see the average sales price was in the Northeast, even though it only made up 4%. The average sale price for Northeast was $181,000, whereas in the West, it was $151,000. And this is specific states where investors sold real estate where they also live there. So again, Arizona, 100% of the sales that were done there were by clients who lived in the states. California, 73%. Tennessee, also 100%. So for the majority of the people who sold across the board for people in these states who sold properties in 2016, they also lived in the state that they sold their property. This is the types of investment properties that were bought and sold by Entrust clients in 2016. So see, for single-family purchases, a little more than half were single-family, and that's a 7% increase from 2015. The multifamily resident purchases didn't change very much from last year. The biggest gain, interestingly, came from clients buying vacant land. Last year, the purchases were at 12%. This year, it's at 19%. And 59% of the properties sold to interest clients in 2016 were single-family residences. And then vacant land, again, was the second most popular asset sold for real estate in 2016 at 24%. And then obviously multifamily residence, people maybe hanging on to those a little bit longer. Those are at 12%. I think part of what you're seeing with some of these, with the sold at 59%, can be attributed to fix and flips. We see a lot of those, and those are usually single-family residences when they're done that way. Types of IRA used that our clients use to invest in real estate: traditional IRAs made up the majority of both the purchases and the sales. Then Roth IRAs were second most, 16% of the purchases, 17% of the sales. Then SEPs. This is the first year that an Indy 401k showed up as real estate investment. So we've gotten some clients who are taking their individual 401ks and buying real estate. That's the first time that it's been enough that it's even shown up as a percent on our report. This is national real estate, so this isn't specifically related to IRAs. This is a typical buyer and a typical seller. We got this information from the National Association of Realtors, a report that they point out. So typical buyer of real estate, 43 years old. The median income, $88,500. 83% are buying a single-family home. 35% first-time buyers. 66% married. 86% bought previously owned house. Bought not a new home. For seller, typically a little bit older, 54. Higher income. There's the 43 over the original purchase price on average. Higher percent married, and 72%, that's an interesting statistic, moved within the same state after selling. And then we have it broken down by the various generations for percentage of buyers and sellers. And you can see millennials make up the highest percentage of buyers, and Generation X, 65 to 79, make up 1965 1979 as the age range there, make up the highest percentage of sellers. What's the reason for investment? For investment purposes, and again, we got this information from National Association of Realtors, so this is national information. Vacations or family retreats increased a little bit. For future retirement, there you go, that's where IRAs fall in. Increased potential price appreciation. It's a good deal, remained roughly the same. Generated income by renting dropped, and then low mortgage rates, and then other. So over 1/3 of real estate investors bought property for the purpose of generating a rental income stream. And again, that went down by 5%. And these reasons, like all these reasonings, are pretty consistent with what we see with our account holders. Their reasons for wanting to use real estate to grow their retirement account. Generate income by renting becomes a really big deal. Potential price appreciation and future retirement. A lot of those are the same reasons why people are using their retirement accounts for investing in real estate. So here's some national real estate trends. Again, non-IRA associated with rent increases in different states and different cities specifically. So more than 1/3 of households, nearly 43 million, rent. Nearly 20 million of them rent in buildings with 5 or more units, and 15 million rent single-family houses. 78% of the properties purchased by Entrust clients in 2016 were single or family or multi-family residences. The rent generated by these properties creates steady revenue flow into their tax-advantaged retirement savings account. So that's why people are doing it, to get to grow their retirement accounts through being able to rent their properties out typically. Overall median monthly rent was $940, and units built after 2000 bringing in a median rent of $1,090. Overall rents rose 1.4% in 2016 compared to 6.6% a year earlier. So rents are leveling off a little bit. The rental market is influenced by location, and the percentage increase in several states was considerably higher than the national average. And so these are examples of the ones that were higher than the national average. Oregon, Washington, California are among the states with the highest rent increases in higher rents period. In certain cities, Pittsburgh was down 3%, Houston was down 2%, and Milwaukee went down 2% from 2015 to 2016. All that information is not on there. I have some notes here that I'm obviously reading to you. So interesting information about rental stuff. Typical reasons why people invest in real estate with an IRA. If you know real estate, if you think real estate is a good investment to increase your own personal income outside of an IRA, then why would it not be a good investment to also increase your holdings within your retirement account? So a lot of people feel like real estate's the best way to grow your retirement account. And that's what they know. People know real estate better than they might know stocks, bonds, and mutual funds. It provides diversification. If you have the majority of your retirement accounts being held in mutual funds that are in the stock market, throwing some money in real estate is a hedge against any volatility that you might experience with the stock market. And obviously the main reason, generate revenue and watch the value of your investment grow on a tax-deferred or tax-free basis. Traditional IRAs, tax-deferred, Roth IRA grows tax-free. Again, it really comes down to, do you think that real estate is the best way to grow your retirement account? Is there a property out there that you think is a good investment, and you've got the money in your retirement account, you think it's going to grow your retirement account better than mutual funds do? Then there's no reason not to do that investment. And the steps to open a retirement account, open an Entrust account, and invest in real estate, just open an account. You can either do that online. We have an online portal that you can use to open an account. It'll take you about 10 minutes. Or you can fill out our forms, which take you about 10 minutes, and then send them to us, and then it'll take us about 5 minutes to open the account. Then you fund your account either through an IRA to IRA transfer or rollover from a 401k or making an annual contribution. Then once your account's funded, you instruct us to purchase whatever asset you want to purchase. It could be real estate, private placements, precious metals, whatever you want, as long as it's not a prohibited transaction and as long as it's not collectibles, life insurance, or S corporations, then we'll process that transaction for you, and now your IRA owns that asset.